Yeah, I think they pose a different kind of risk, and in some ways they're very much a manifestation of what we went through with the financial crisis. You know, with crises, you tend to encounter extreme fear, and once you get through the crisis, at some point the anger manifests itself, and you can see that anger playing out through the ballot box in terms of populism in a lot of different parts of the world. And people generally want to retrench. And so from that perspective, I think, you know, you can imagine deglobalization being a significant, at least secular threat. I'm not sure it's a threat akin to a financial crisis. It's something much slower moving. If you want to look for a new risk, I would say that a lot of people are focusing on liquidity as the new leverage. And in that sense, it's more, you know, from a leverage perspective, we've basically gone to a world where debt levels are still very high, but we actually have a lot of capital behind that debt, a lot more capital than we did 10 years ago. Whereas in liquidity terms, we've created a market infrastructure that I would say is much more fragile and prone to bouts of illiquidity and inability to move risk around in ways that the financial system is inherently dependent on.
What do you think the ultimate risk is of all the trade talk, trade fight, trade wars that we've got going on right now, Gene?
Growth. I mean, I think very simply it's growth. You know, I was listening to an earlier part of your show, and you know, there was this suggestion about trade and the dollar and the Fed being the key driver of stress on emerging markets. I mean, it's growth. You know, really the surprise of the first half of the year had nothing or very little to do with trade. It had a little bit in terms of risk aversion. But the surprise was we came into 2018 thinking that we had a global synchronized recovery, and suddenly, you know, growth decelerated very rapidly in the Eurozone and to a lesser extent in Asia. And that really was a blow to the emerging markets, which are the ultimate leveraged plays on global growth. So anything that affects growth, I think, is a big deal. So far, you know, trade has not really had any measurable impact on actual growth, but you can see it starting to affect confidence in different parts of the world. And it's starting to hit on, you know, what I would call stress fractures that are in certain parts of the financial system and starting to exacerbate those stress fractures.
There seems to be a level of optimism out there, Gene, that is, you know what, despite all the talk and the tweets and whatever else, that things are going to get done, that cooler heads will prevail, and that these trade tussles will be settled. What if they're not? What if tariffs are enacted? What if they stick?
Yeah, I mean, I think that's, you know, inevitably you hope for the best and plan for the worst. And I think from the perspective of an escalating trade war, I mean, our expectation would be that it starts to weigh more materially on global growth. So China is trying to engineer probably one of the most challenging deleveraging processes the world has ever seen. And so far they're sticking to that course, but trying to do that in an environment where trade frictions are ratcheting up is going to be very challenging. So, you know, one possibility is that they jettison that effort and they try to stimulate in the old-fashioned way. Maybe it does, maybe it doesn't work. But again, that's sort of trading a longer-term problem for a shorter-term palliative. I think on the United States side, you know, we're seeing, you know, classic signs of what happens when you go toward a more populist set of policies. It looks great over the first couple of years. Growth looks very strong. You know, we have never seen this degree of equity market divergence between the U.S. and the rest of the world. But at some point, you're kind of burning a lot of ammunition to fight future fires. And so from that perspective, I think, you know, we would probably head toward a weaker dollar world, a weaker growth world, a world that's not very favorable for the emerging markets.